Now let's look at exercise 13. All right, so exercise 13, we're going to prepare the statement of owner's equity of Elegant Arrangements. So this is the next statement we're going to prepare. Out of the financial statements, we're going to look at the income statement, the statement of owner's equity, and the balance sheet. You need to know what the statement of cash flows is, but we're actually going to do that statement in Principles of Accounting 2. All right, so here it says Elegant Arrangements has just completed operations for the year ended December 31st. Okay, third year of operations. So same information. We're just going to prepare the statement of owner's equity. So again, we'll start with our heading here. So we've got Elegant Arrangements. And we'll start with identifying what statement we're preparing and for the period of time. So the statement of owner's equity is also for calculating the balance of the equity and capital account over a period of time. So it's going to be for the year ended December 31st also, just like the income statement. Okay. All right. So remember how we did the calculation of equity in one of the earlier problems? It kind of follows the same, that formula kind of flows through on the statement of owner's equity. We're going to start with the actual capital account at the beginning of the year. So this is at January 1. All right, which they told us, if we look for that year, was $10,500. Okay, so that's what we're going to start with. Then we're going to add in everything that increases our equity account. So owner contributions, which I don't even see that account here, so that must be 0. And then we'll add in net income, okay, for the year. And when we calculated just then on the prior problem, it was $13,900. So we're going to add $13,900, okay? And we're going to total all of those up. All right, this number here isn't labeled. This is just something we total up to make sure this is a positive number, because the next thing we do is we put in owner withdrawals, okay, or distributions. Those words mean the same thing. So we can't have owner withdrawals if we have negative equity or don't have enough equity. So we always like to total it up first to make sure we have enough in there to take out withdrawals. So for here it says Rose withdrawals were $3,900. So we're going to take $3,900 out of there. Then we'll get our balance. All right, so we add that to the beginning, the contributions, and net income. And this gives us our capital balance as of the end of the year. So December 31st, 2014. All right, so you've got to remember how to make this calculation and calculate ending capital, because it's not going to be given to you. Okay, even if you're not required to prepare this statement, you have to know this calculation to get the ending number, because this right here is what goes on our balance sheet. Okay, these numbers, that number here does not go on the balance sheet. It's this. Okay, and none of this activity is going to show up on our balance sheet. It only shows up here on the statement of owner's equity. Okay.